WaFd CEO and President Brent Beardall. Brent, thank you for being here. I guess the main question surrounding today's rate decision as it pertains to smaller banks in particular is whether or not you feel like financial conditions are particularly restrictive right now. And if so, what a 25 basis point cut would mean vis-a-vis a, say, 75 basis point cut.
Yeah, Leslie, great to be with you and really good questions. And it's interesting that you led off with what's happening with the big banks, and they are, trading at all-time highs, and rightly so. They're absolutely killing it. And I do believe a 25 basis point decrease in rates, if that happens, which is obviously the consensus, would be good for all banks and good for regional banks, but most importantly, good for our clients. The real question I struggle with is why? Why are we doing a 25 basis point cut right now when stocks are at all-time highs, real estate values are all-time highs, inflation has come down, but it's still higher than the Fed's target rate, and employment is certainly trending negatively, but still unemployment is near historical lows. So I kind of scratch my head as to why the timing on this.
So as you scratch your head, do you feel like the environment would be better off if rates were to stay where they are? Obviously, just, the bank business is such that you want to be able to lend at a decently high rate and capture a spread there. Now, you have to have the loan demand to back that up. But I'm just curious kind of where that inflection point is for you right now.
Yeah, no, there's no question over the last couple of months as people are settling into what tariffs are and what this new economy really looks like, we're starting to get a pickup in inquiries in terms of loan demand. So I think loan demand will increase regardless of the move by the Fed. But if the Fed does move 25 basis points, I think there'll be an uptick in terms of economic demand because very simply, it's easier for borrowers to cover their debt service coverage ratio. The other real impact that not a lot of people are talking about, we've spent so much time talking about commercial real estate and the doom and gloom of commercial real estate with banks, especially mid-sized banks, and that just has not materialized. And this is a great example of if you can just stay with it. Now, all of a sudden, rates are coming down. As you know, the long-term rates, which are largely a function of what the market anticipates happening with the Fed, they've come down 75 basis points from the first part of the year. So now commercial real estate borrowers can get a significantly better rate than they could have just 9 months ago.
And Brent, right related to that is the housing market. One of the answers to the question of, hey, why do we need to be taking pressure off of the economy when financial conditions look loose is housing market seems stuck. You have some pretty poor housing start numbers today. People have really felt as if mortgage rates have to come down a lot. Naturally, that's about market interest rates like you're suggesting. But what about that sort of spread between mortgage rates and the 10-year yield? Is there anything that can be done either by the banks or by policymakers to try and encourage those mortgage borrowing rates to ease a little bit?
No, you've hit the nail on the head. What happens with the spread? And in anticipation of what's going to happen, we've already seen mortgage rates come down. I think what was published this morning is the current rate is down to about 6.4% on mortgage rates, which is down from about 7% just a few months ago. But what can we do to get spreads down even further? We have to de-risk in one way, shape, or form. And the reality is we need more supply in terms of housing. It's a supply-driven problem in terms of our cost of housing. If we had more supply out there, I think you'd see the cost of housing come down. And frankly, it's been my biggest surprise with this increase in rates. Normally, when you get a massive increase in mortgage rates, you see the value of residential real estate come down. We just didn't see that in this cycle.